is the January, I think was it 27th, 26th of January. And so welcome everybody. And I want to welcome all new people subscriber wise. And students came up with a chart and we want to discuss it a little bit. And recognizing that this biotech stock, I believe it's the right one, correct? I believe it's the right one. Okay. And someone mentioned about the sign of strength on the daily chart. So I wanted to investigate it with him a little more. And I wanted to render an opinion upon the market. Okay. So here is the stock here. And you think that there's a sign of strength here, and this right here, and this particular bar, 2 bars over. Okay, I wouldn't consider that a sign of strength. I would consider that some buying, and I would consider that some short covering above the market as well. And I will explain to you. So in the idea of the sign of strength is a phenomenon that we have during the accumulation phase of a particular market. So in Wyckoff sequence, we have the preliminary support, the selling climax, automatic rally, and secondary test to the market that we see. Okay? So, in this case, we have a market that's going down, and we have some type of stopping behavior. We have some type of stopping behavior to the market. Okay? So in this case, we don't have the selling climax because the range generally is not wide enough. But we have a very large volume bar here, and we have a range that's not so wide. So we compare ranges in action. We compare the bars to itself and the volume to itself in the areas the market's trading in. I will explain that to you. As the market's in a downtrend, we continue to sell the market to the downtrend until we see some type of change in behavior. That generally will be the selling climax. It could be the bag holding, it could be after the result as well. But in Wyckoff paradigm, we usually want the selling climax. So the market goes down here, and we can see as the market's coming down, the market's volume happens to be increasing. This is the long liquidation of people that were long trying to buy the market they're getting out. You also have new funds and specs selling the market down because they want to get short. So you have a combination of both. So we want to compare the volume and the range of the particular markets. So we have this range here that gave you this volume. This range here gave you this volume. It's normal. Why? This range is a little bit larger volume. A little smaller volume. So far, so good. This range here, the range of the bar barely makes a new low. If you can see it right here. And the range is about the same, and the volume's the same. But this range is actually a little bit smaller. So the lack of downside progress means that somebody is buying the market on the way down. Okay? So this is tape reading. And this is not such a beginner aspect of it. It's more a little bit, let's say a little bit more intermediate. So the volume coming in, which is fairly high relative to the area, the lack of downside progress is some type of bag holding or some type of CM making the market held up in their end. The low end close makes the market probe lower. Smaller range, high volume. All the longs gave up. That's it. I'm done. The CM says, no, you're not. I'm buying price. Buys price. We don't buy this market here because we don't have a Wyckoff principle called cause and effect, do we? But we know that looks like some type of stopping behavior. So we want to see the reaction up. Well, market stopping action. the market action is poor. Even though the high end closes, the volume drops off. It's a lack of demand. What does that tell me? That tells me expect a secondary test. To test to see what demand is there. The market does that. Now the market increases on the buying. Green is buying. So now this market has fairly smaller range and lighter volume. This is a decent retest of the market. But because the market's action is bearish, it has to get above a support area. Above a supply area. That first supply would come right here. We mark this bar going across. It's the high before the market makes a low. The high before the market makes a low. We want to mark this bar. Boom. This market now is a retest. High end closes towards the resistance area is what we call absorption. It's absorption of any selling that happened over here. The market then has some type of short covering rally. This is not the sign of strength market because we don't have enough spacing and we don't know if the market is able to sustain any type of rally. We don't want to buy the first rally from weakness, but we also know that when the sign of strength comes, it happens more on the right-hand side of the trading range because now the market's in the ready position to go up. That's why we have a sign of strength, sign of weakness. So it's a sign to the other CMs. We develop nicely more cause, typical of a market. Your level of knowledge is zero here because high-end closes could break, low-end closes will rally within the trading range. Lower. Now, a student questioned if this was a sign of strength. I say no. Why? This volume is not even the highest volume on the recent up moves. It's a buying bar, but it's not the sign of strength bar that we need to look for. The spacing of the market, the cause of the market, is fine here that it happens here. This range needs to be larger. This volume needs to be higher to be considered a sign of strength. Is it buying, overcoming, selling? Yes. Is it short covering? Yes. Is it a positive statement? Yes. Is it a sign of strength? No. In order to be a sign of strength, the market needs to have wider range and more increase in volume. So we have a buying bar, we have a demand bar, and we have a sign of strength bar. A demand bar is a sign of strength bar. It has to have demand, but not all demand is a sign of strength. Depends on where the market cycle or where the market of the trade range is. It doesn't happen on the left-hand side with volatility, but it happens on the right-hand side as the market has built cause and the market has a chance to go higher, just build that cause, or lower, just build that cause. So that's why I want to talk about sign of strength and sign of weakness market. This is the biotech ETF. It's something to watch your eye on because now we are forming a higher trade range. So we would need some type of we would need almost like a third more volume and a larger range to be considered a sign of strength. Thank you very much.